Hello guys, this is a trade of the day. I'll be going over today's trade that I made on Friday, February 10th, 2017. As a reminder, this video is for learning purposes only. Alright guys, so today I closed one of my swing positions, Google. The whole NASDAQ sector has been leading, it's been trending. The FANGs, which includes Facebook, Amazon, Netflix, and Google, the big tech, all been leading the NASDAQ. So that's the reason why I traded Google. That's the number one reason. When you're swing trading, it's very important that you are swing trading stocks in a trending sector. It's got to be trending. Now, if you look at the Nasdaq, it's been trending on this 9 EMA. It's never looked back. So these are great sectors to be in, and it happens to be that the big tech FANGs are leading the Nasdaq and they're trending. So Google was one of the stocks that I was looking at. I was also looking at Netflix, but I decided to trade Google because it just looked a lot better in my opinion. So what kind of setup is this? Now this is actually buy the dip type of setup, buying into support after this huge oversold on the chart. Now on January 27th, Google had earnings, and for whatever reason, investors and traders decided just to sell off. The sell-off was pretty hard, pretty quick. And then you can see the statistics are below 20, so that's definitely oversold. And it actually went straight to support around 818. And not only that, right to the 50-day moving average, which is kind of like a trendy moving average that also is known as support, very big support. So I was looking to kind of dip buy in that area. So I wanted to kind of see a nice green candle, and I did see it here on February 2nd. Now it wasn't the best green candle in my opinion, but the way I saw it is like, you know what, this may just kind of range bound for a couple days and start moving up. So I want to get in at least in a decent position with my stop below the 50-day moving average, so I could kind of get the best reward to risk ratio. So as a reminder, guys, you want to keep a 2-to-1 reward to risk ratio in every single trade you make, whether it be a swing trade, day trade, it doesn't matter. So I got in, and I was pretty much right. It started to bounce off back and forth, started to range, and today it actually hit one of my first targets. Now, I did buy around, just so you guys know, around 820, and my first target was around 836, and my second target was on 841, 35. As you guys can see, this is one of my levels, target levels that I kind of put in there, alert me when it hits those levels. So today it hit that level. It did hit 836 today mid morning, and I actually decided to close everything. Now it wasn't exactly 2-to-1 reward to risk, but it was pretty high up there, definitely over 1.5, and that's very important. You definitely want to keep the reward to risk ratio 1.5 or higher. If you get 2-to-1 or closer to 2-to-1, that's best. But sometimes these trades sometimes don't hit your 2-to-1. So when you have the opportunity to take your profits, you gotta take them. So I decided to take them. And also being that it's Friday, you never know, something may happen over the weekend, bad news, who knows, and the opportunity to take the profits may be gone. So, and it's kind of been, and actually moved straight to that range. If you look at this range from 838 to 818 pretty quickly, quicker than I thought. So when stocks move quicker than you expect, sometimes there might be a reversal coming. And there's actually overbought in statistics too, closer to 80. So I mean, it gave me a lot of indications that, hey, you gotta sell, take out your money. So I did. So hey, hopefully you guys learned something from this trade. If you like this video, please click like, share with your friends. People who are interested in trading and swing trading. Again, this is all for learning purposes. If you like these videos and you want to keep seeing more videos, please subscribe to my channel. I'll be posting more videos, and you will hear from me soon. Thank you.